Here, Rick.
All right. Now, how do you make investment decisions given everything that's happening around the world? Some of these events we just talked about. The noted global investor Marc Faber, who's the editor of the Gloom, Boom, and Doom Report. He joins us now by telephone. And, Mark, we could talk about, Japan and Europe and here in the United States. But let me begin with what Rick was talking about in Libya and the rest of the Mideast. How did those events change your investment strategy, or do they?
Well, basically what is happening in the Middle East is, of course, friendly for gold and friendly for oil and other commodities. I mean, the mess in the Middle East will only increase over time. Nothing has been solved. In Libya, we have basically a civil war. It's not necessarily about democracy. It's one group of people that want to oust Gaddafi,
right?
Maybe rightly so. But all these things are basically indicating, including the earthquake in Japan, that central banks will continue to pursue expansionary monetary policies. They keep interest rates artificially low, and that boosts, obviously, equities and also commodities.
That's helping both today. I mean, the Dow here in the U.S. is up 68 points. It was up 4 out of 5 days coming in today. And people say, well, why, with all that's going on in the world, are stocks up? Oil's at 106. And you just hit on the key point there. So let me move over to Japan, because I know right before the earthquake, you had just turned bullish on Japan and recommended a number of stocks there. How do you feel now?
Well, I think basically after this kind of 20 years bear market in Japan, the valuations are low. And the key to the performance of Japanese shares is that the Japanese bond market becomes unattractive and that the yen over time weakens. And I think as a result of the reconstruction work that may cost up to $300 billion that obviously the government will have to monetize, and that Japanese bonds are in the longer run terribly unattractive, and that will push money into equities. So I think that Japanese shares are worthwhile to accumulate. Having said that, I think that asset markets are beginning or have begun a correction. We peaked out on the S&P on February 18th at 1344, and usually in April we have seasonal strength. But I think it's likely that the S&P will not be able to make a new high, and then we'll have a more significant setback in May, June.
Some more, say that last part again, the Fed getting back involved, you were saying?
Well, I think it will be difficult for the S&P right away in April to make a new high above the previous high at 1344, which we reached on February 18th. And thereafter, I think the correction will continue. I mean, a lot of stocks are already down 20%, important stocks, and also precious metals, in my opinion, they are moving up, but they're not acting all that well.
Okay, so you don't see new highs being put in. And does what's happening in Europe affect that at all, to the extent that, it's gotten off our radar with all the Middle East problems and the issues in Japan, but now, Portugal maybe needing a bailout. How does that play into it?
Well, I think that the euro, contrary to expectations, has rallied essentially to a high level at around 140 against the US dollar. So I think what we could see in the next few months is kind of a rebound in the US dollar, weakness in asset markets, in equities, and also a correction in commodities, and maybe a rebound in US Treasury bonds.
Correction. Just one quick answer then on, say, oil and gold. What does a correction look like in price terms for both of them?
Well, I mean, we live in very volatile times. I mean, a correction could be 10%, could be 20%. But I would, on any weakness, accumulate gold. Because as long as you have the central banks that will print money, the longer-term outlook for gold is favorable.
It's still favorable. Mark, thank you very much. Marc Faber.
It's my pleasure.
By telephone with us today.